You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we're coming back at you here, live on the network for TWIFO, This Week in Futures Options, the program where the name pretty much says it all. It breaks down the week that was and indeed still is on the futures options side of the fence. What's lighting it up out there in, I don't know, ags, metals, equities, rates, FX, crypto, you never know what's going to make it on the show. That's why you have to tune in each week. My name, of course, Mark Longo from the optionsinsider.com, as well as from the ever insightful, ever engaging network upon which so many of you are binging these days. Remember, if you do like what you hear, this show, the rest of the network, our app, wherever you're getting our content, Audible, YouTube, it's available everywhere. Throw some stars, a rating, a like, whatever your platform lets you do. It does help new folks continue to discover the content. If you want to discover more content on your own, only one place to go, theoptionsinsider.com/pro is the place to go to get over 200 plus exclusive episodes waiting for you the second you hit that button. Plus, new pro exclusives every week, early access to content everybody else is going to be waiting a long time for. And of course, get your name in the hat to win pro trading crates. Congratulations to Mackenzie, one of our longtime pro members, winning the June pro trading crate. So congratulations to you. You want to get your name in the hat, you want to win the July crate, theoptionsinsider.com/pro is the place to go. As we keep on going into our first segment, it's time to find out what's lighting it up to the light side and to the dark side. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down everything moving to the upside, hitting some green, and to the dark side, hitting some red over there at CME Group this week. You want to see this report for yourselves, give us a follow at Options on Twitter, or give a CME a follow, CME Group. I know a lot of you already do. You'll see this report out there for you right before showtime. Of course, if this report intrigues you, and of course all the TWIFO reports we're using here on the show intrigue you, then make sure you do check out bandtix.com. Sign up for the free trial of QuickStrike. There's a heck of a lot more data waiting there under the surface that we don't have time to get to here on the show every week. Bandtix.com, the place to go to try all that out for yourselves as we get on into the movers and shakers this week. And it looks like a fairly even split this week, pretty close to 50-50, the closest we've seen in a while. Very much lately, we've been biased pretty heavily in one direction or the other. This week, not so much. We have pretty much even numbers on both sides, even if the biggest mover does appear to be to the light side. But it's me, listeners. I'm going to start at the dark side where I like to go. Remember, we talked a bit about these S&P sectors that CME has listed futures on. No options yet because the volume isn't quite there yet, but they have futures trading on them. Well, those sectors starting to make it onto our radar. We've talked about real estate a few times in the past. Coming in at number 5 to the dark side this week is the energy sector, off 2 2/3%. It was number 3 in the other direction last week, up 2 2/3%. So giving back pretty much exactly what it gained this time last week. Number 4, staying in the equities. We're going out to our old friend, the Russell 2000. Taking a bit of a break this week, off 2.85%. We had a deep dive with the folks over there at FTSE Russell not too long ago about all things recon and all of the interesting trends and data coming out of it. Check out that episode from a few weeks ago if you are intrigued by all things small cap. Number 3, we've got the materials sector. So a lot of these sectors starting to make it onto our movers and shakers every week, which is very interesting. The S&P materials sector off 2.95%, so threatening 3% to the dark side. Number 2, one of our old friends, one of our frequent offenders. It is Nat Gas. Good to see it back on the list. It just seems wrong if we don't have Nat Gas on the week in one direction or the other. Definitely of our 3 frequent offenders, it is the most frequent. This week, it is number 2, off 3.86%. Will we see our other 2? Well, we see lumber, kind of a bit of a hiatus for lumber. Also a bit of a hiatus for Bitcoin on the show. Will they make it on the show this week? I guess you have to stay tuned to find out. And number 1, dark side mover this week, going back to the ags, it is corn, off 4.97%. It was our number 1 dark side mover last week, off 14.62%. If you listened to the show last week, it was pretty much all ags all the time. They were inescapable. It's like we're going to have a few of them on the show this week as well as we keep on rolling into the light side. Staying in the ags, listeners, it's the beans getting back some of their mojo. Stella getting her groove back out here, up 5.27% for all things soybeans. Coming in at number 4, listeners, we've got KC wheat, up 5.75% on the show. It was number 4 in the other direction last week, off 8.02%. So not quite getting back everything that it lost last week, but a good showing nonetheless. You have to tip your cap to it. A respectable showing out there for all things KC wheat. Number 3, staying in the ags, but moving to the livestock, listeners. It is our old friend lean hogs, up 6.9% on the week. This time last week, it was coming in at the number 5 spot to the upside, up 2.5%. So a good couple of weeks out here for all things livestock. Number 2, going back to the beans, this time soybean oil up 7.13%. It was in the exact same spot last week, number 2 to the upside, up 2.98%. So that shows you how strong and how robust the numbers were last week versus this week. And then, of course, coming in number 1 to the light side this week, exploding to the upside, it is oats, up 10.14%. Again, before you get all hot and bothered about oats, probably 3 contracts on the tape right now, listeners. So not a heck of a lot of paper going up out there in all things oats. So we're not going to be hanging out there. So we have a smattering. We have a representative sample out here this week. A lot of ags. It's our old friend energy, a little bit of equities in there as well. And since we haven't talked energy in a couple of weeks, I think we'll head out there first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the wonderful, the interesting, the head-scratching world of energy. You know to go to cmegroup.com, get into that drop down, pop in, go down 3 slots to energy. Then you're going in product family, going to go down to nat gas. That's where we're going to hang out there this week. 261 is where we're hanging our head and holding court this week, off about 18 cents, nearly 19, about 18 and a half right now in the week, or about 6.6%. Of course, if you go back to the end of our show last week, we have nat gas off nearly 4%. So 261 is where we're hanging out right now, hanging out right around that 260 level. We've been talking for a while. Will nat gas pop? Will nat gas rally? Had a decent little rally going, giving some of that back now this week. 260, again, it's not threatening the 2 handle anymore, which is nice. More threatening the 2.5 handle. Also not knocking on the door of the 3 handle either. So intriguing stuff out here. As I mentioned earlier, this was a truncated holiday week, listeners. No action going up here for the July 4th holiday on Tuesday. So that's going to eat into some of the numbers we're talking about here. For example, nat gas usually on a normal week going to do somewhere around 400,000 contracts. This week, closing in on 250,000. So obviously a little bit lighter out there this week. The big dog, such as it was, going up in the August contract, listeners, where nearly 40%, 39.2% of the paper going up out there, listeners. So we'll hang our hat out there. What is the vol in August nat gas? You might be wondering. Nat gas known for a little bit of froth, a little bit of effervescence. 64.6, up 6.25. So getting a little bit of juice back, getting its groove back again this week, at least from a vol perspective. Skew, 2.5 points were the puts. They were bid last week. This week, looking at about 3-point premium. So the puts stay in bid. The calls last week, 1% cheap. This week, pretty much flat. So the calls flattening out. No real action there. The puts, 3% bid. So it looks like nat gas, a little bit biased to the downside in the near term, which again, given the price action we're seeing right now, not exactly surprising. In terms of the action, listeners, such as it was, not exactly a rock'em sock'em robots week out here with the holiday. It looks like it was the 3 calls in August leading the dance yet again, which is a strike you'd probably be forgiven for expecting to do pretty well, listeners. Nearly 19,000 contracts on the tape. Almost all of that coming today. Nearly 16,000 on the tape today. 2,400 on Wednesday, about 700 on Monday. Obviously, again, the holiday coming on Tuesday, so a little bit of a weird one this week, listeners. Opening all week long. Today, we don't have the info, but again, there are about 17,000 contracts open on this strike, so it could be closing. Folks could be bailing on these AUG 3s. Again, maybe this price action this week spooking them. They're deciding, you know what, got to get the heck out of Dodge, not going to make that 3 handle by AUG expiration. Either way, listeners, ton of paper going up on the AUG 3s. That's our number 1 most active contract this week, listeners. Then right behind it, we go out a little bit. Let's see, we go all the way out to October. Got the October 2 puts lighting it up nearly 15,000 times this week, 14,939 to be precise. The big day for those also today, 8,200 today, 4,300 on Wednesday, 2,400 and change on Monday. Looks like back and forth opening to closing all week long. Worth noting, there's a ton of OI on this strike, about 72,000 contracts, so it's anyone's guess what they were up to today. But a ton of paper on the 2 strike. That makes some sense, as we've been talking about in the past. Whenever nat gas seems to threaten the 2 handle, we see a ton of paper going up 2 strike puts and below. So it makes sense there'd be almost 72,000 of these open, but still intriguing coming in at the number 2 spot, listeners. These October 2 puts. Then back to some more puts. This time the 240 puts in August, going up 9,100 times this week, 5,000 times today, 4,000 times yesterday. Obviously not much going up on Monday. So the 2.4 puts going up 9,100 times this week as well. Again, bit of a weird strike. You might expect 2.5. You might expect other more psychologically relevant strikes, but nope, it's the 240s going up this week. Then we go back out, listeners, to October because we have the October 1.5 puts. So again, getting back to some of those interesting strikes, going up 9,583 times this week, 4,700 times today, 4,300 times on Monday, only a few hundred on Wednesday. Again, looks like closing throughout most of the week. So maybe some folks are bailing on these because there are about 28,000 open on this strike. Again, we talked about these sub 2 strike puts going up in nat gas before. So it makes sense there'd be some size OI. Maybe this is the week they're taking a little bit of the retracement to get what they can for these things and then getting the heck out of Dodge. Either way, it's like closing action on those 1.5 puts out there in October. Let's go around a little bit, see if we see any other interesting and or aberrant paper. Again, a truncated holiday week, so not a ton lighting it up. For example, if you were excited to see the Nova 2.5 puts go up 3,500 times, and I guess this was your big week. That's exactly what they did. 2,400 contracts today, 1,000 on Monday, 1,000 on Wednesday, and just a few hundred on Monday. So not a heck of a lot going up out there earlier in the week. 2.5 puts in November. And if you want some calls, listeners, we can find some for you. You got to go all the way out to Dees. And again, funky strikes out here in nat gas. We got the 480, the 4.8 strike calls going up nearly 1,500 times. About 1,100 of that on Monday and 300 and change today. Nothing on Wednesday. So opening paper, it looks like it might be a 480 620 vertical that went up on Monday almost 1,100 times. Looks like opening on both. You like that, listeners? Dees 480 620 vertical about 1,100 times. I can't say it's my favorite thing on the planet, but hey, I've seen crazier things. Just look at all the gold upside we talked about on the show over the years if you want to see some really weird upside paper. So this one doesn't qualify as that weird. It's just not my favorite way to get long something like this. But then again, nat gas is a bit of a weird beast when it comes to seasonality. Dees 480 620 vertical. Looks like going up 1,100 times. As we keep on rolling, listeners, I said earlier, there's a lot of ags out here this week, so let's get to those now.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody. You know what to do. Go into that drop down, pop out of energy, go all the way up to the top of our alpha order list. That's where you will find ags. Let's go over in the product family to grains and oil seeds. Let's click on a little bit of corn. Let's click on the big dog. Once again, corn was number one to the dark side last week, 14.62%. Number one to the dark side again this week, off nearly 5%. So a rough couple of weeks for the big dog and the ags complex. Trading pretty much exactly 500 and a half right now out there in corn, listeners. So managing to actually rally a little bit since Monday's session, even though it was net down since last week's show. Let's see. In terms of paper, also looking respectable this week, listeners. 727,000 contracts on the tape for corn. So making up for some lost time out here in corn. No truncated holiday week for corn. They're just slinging paper left, right, and central. Of that, about 36% going up in the Dees contract that has 141 days to go, listeners. So we're going to hang out there. That future's at 407 3/4. So the 510 strike is looking around your at the money there. In terms of vol, what is vol out here in corn, listeners? Is that about a 25 3/4 off, nearly 2 points on the week. So vol coming in here in the big dog for the ags. In terms of skew last week, the puts 2.3% cheap this week, 3.3% cheap. So puts losing a little bit of their luster to the dark side, getting a little bit cheaper. The calls last week was all about the calls. Calls nearly 18% bid in the Dees contract. This week, 3.3%. So whatever juice existed in that call wing last week, listeners, it has evaporated. It is gone. So last week, the time to be loading up apparently on some upside in Dees and corn. In terms of action, what is the big dog out here, listeners? It looks like it is not the calls. I said we're at a 507 3/4 in that Dees future. It is the Dees 4.5 puts, 450 puts going up nearly 24,000 times this week. The big day Monday, 10,600 on Monday, about 7,500 today, and about 5,500 on Wednesday. It looks like opening throughout the week, so folks piling into some 4.5 puts in December. Kind of interesting. Again, these are out of the money puts. We're hanging out about 57 points north of these, so intriguing stuff here, but opening paper to the downside here in December for the puts. Right behind it, we also had the par puts, the 500 puts, which makes a little bit more sense given the fact that that's pretty much exactly where we're trading. Those went up 21,000 times this week. Again, the big day for those. Actually, no, I take it back. The big day for those looks like it was Wednesday. 9,300 going up on Wednesday, slightly closing there. 8,700 on Monday, and then about 3,000 today. So interesting action out here in corn. Right behind it, we do have some calls, the 600 strike calls going up about almost 16,000 times. The big day for those Wednesday, 6,400 on Wednesday, 5,800 on Monday, 3,600 today. Looks like folks bailing on those all week long. So getting the heck out of Dodge on the 600 strike calls. And then back to the puts for number 4, the 440 puts also in December, going up 14,500 times. The big day for those Monday, about 7,000 on Monday, slightly closing, almost 6,000 on Wednesday. Looks like opening there. And about 1,700 today. So interesting back and forth paper in the corner. Let's go a little bit farther afield, see what else we find. Let's go back a little bit, actually. Let's go back to August. The August par puts, the 500 puts going up nearly 12,000 times this week. The big day for those Wednesday, 6,400, 4,400 on Monday, a little over 1,000 today. Looks like folks bailing on these as well. So folks closing on the Aug par puts here for a decent amount of size, about 12,000 almost going up this week. Right behind it, we have the 550 puts in August going up about 11,500 times, 6,500 on Wednesday, 4,600 on Monday. So it looks like the paper does line up well for a roll, with the exception that they were also closing on the 5/2. So closing on the 500s and closing on the 5/2, that wouldn't be a roll. That'd be just obviously just taken off a vertical there, listeners. Intriguing stuff nonetheless. And let's also look really quickly. We got the 4.5 puts going up in September. The 4.5 puts in September doing about 11,000 contracts. The big day for those Monday, 6,600, 3,000 today, and about 1,600 on Wednesday. It looks like opening all week long here. So maybe some folks rolling from the AUG contract into these. Intriguing stuff either way, listeners, out here in the big dog for the Ags, which is corn. As we keep on rolling, staying in the Ags, listeners, let's get out to a little bit of the stuff that can literally move and shake. Let's go out to the livestock. Let's go to our old friend lean hogs. Get out of that grains and oil seeds drop down. Go down a few slots here to livestock. Then go down one past live cattle. We're going to go to lean hogs. How much paper on the tape this week? Nearly 90,000 contracts. That shows you just what a different volume regime we are in for the lean hogs. This used to be kind of an also-ran product not that long ago from a volume perspective. These days, putting up nearly 100,000 contracts on a shortened holiday week. So, lean hogs, maybe looking here to stay here. Where are lean hogs trading right now, listeners? That front future almost exactly 100, up about 4.3 on the week. If we go out, though, to where most of the paper was this week, exactly 50%. It was in the August contract, and that future's at 96.80, up about 420 on the week. So intriguing stuff out here. What is the volume, you might be asking yourself, in lean hogs? And it's hanging out around a 30 here in the AUG contract. Looks like 30 is kind of the level for all the way out to close to December out there. So Intriguing stuff, a little bit of vol we found out here in the lean hog. So again, if you looked at the 17 we hit today very briefly in VIX, you're like, I could use a little bit more vol. Maybe lean hogs will be your huckleberry. In terms of the skew, listeners, the puts last week, 6.9% rich. This week, 13.8% rich. So the puts catching a nice bid. The calls last week, 1.9% cheap. This week, 10.9% cheap. So they are coming for the calls. They are bidding up the puts. This has all the hallmarks of your traditional equity/investment skew here. And in terms of action, what was the big dog out here this week, listeners? It was the 90 puts in August. Again, I said we are trading at about a 96.80 in that future in August. The 90 even puts going up about 6,300 times. Almost all of that today, 4,800 today, 1,400 on Wednesday, a couple hundred on Monday. Looks like opening earlier in the week and potentially opening again today, even though there are about 5,000 contracts open on the strike. So they could have taken them all off today as well. We obviously won't know till tomorrow. In terms of also seeing some calls, we got the pars, the 100 calls going up 4,300 times this week, 1,800, almost 1,900 today, almost 1,900 yesterday, and then about 500 and change on Monday. So intriguing 90 puts and the par calls leading the dance in everyone's new favorite product. Lean hogs also got the 88 strike puts, so intriguing puts, intriguing strikes going up about 2,200 times, most of that going up on Wednesday. And we got the 98 calls. So again, weird strikes going up about 2,000 times. Also with about half of that, 1,000 going up on Monday. The rest scattered throughout the week. Let's go a little bit farther afield. See if we see anything else weird. How about the 76 puts in December, listeners, going up about 2,000 times as well. Again, funky strikes out here in lean hogs, 2,050 roughly, 1,400 on Wednesday, about 500 today, and a couple hundred going up on Monday. Looks like mostly opening on these 76 puts. Again, funky strikes here for days as we keep on rolling through the ags. We talked about the big dog, which is corn. We even talked a little bit of lean hogs. But you know what? The beans are also lighting it up, listeners. Let's get out to the old soybeans as well. Let's pop out of livestock. Let's go back to the grains and oil seeds. And let's click down 3 slots to good old soybeans. Coming in today, right now, 1451 and a quarter in that front future. Also decent paper this week, 314,000 contracts on the tape. Again, this is a shortened holiday week, listeners, so bear that in mind when you're hearing all these volume numbers. But that's an impressive volume level nonetheless for soybeans. Where was all the action this week? It was in November. It was in the November contract, about 40% of the paper going up out there. That has about 113 days to go. We'll hang out there in the D's contract, listeners. That future 1342. The vol, you might be asking, what is the vol in soybeans right now? It's at about almost a 21, about a 20.9 off, about 2 1/3 on the week. In terms of skew, last week the put 6% bid. This week swinging the other way, 4.7% cheap. So quite a mighty swing in the put skew here in November in the beans, listeners. And in terms of calls, last week the calls 1.2% bid. This week, 6.5% bid. So interesting. We're seeing a bit of a flipping of the script. Bid to the puts last week, about 6 points. Now those have collapsed and gone the other way. And now the bid has swung to the calls, 6.5% bid up there. So intriguing stuff. And in terms of leading the dance, it was the 1240 puts in November, bringing up the lead here with about 12,600 contracts on the tape this week, listeners. Let's see. It looks like most of that was on Monday, about 10,800 on Monday, 800 on Wednesday, about 900 today. It looks like mostly closing on Monday. So some folks bailing on these 1240 puts for size. Worth noting, there are still about 6,600 contracts open on this strike, so still have some more size to go if they were looking to take it off, but intriguing stuff here nonetheless. And right behind it, we have the 1,400 calls. Also in November, going up, looks like about 12,400 times. Again, the big day was Monday. Also bailing, folks just washing their hands of the beans on Monday, listeners. 7,800 times on Monday, about 1,900 on Wednesday, 2,600 today. Worth noting, looks like they were closing earlier in the week, but there still are about 16,000 contracts open on this strike right now. So interesting stuff afoot out here in the November beans. Let's go a little bit farther back, see what else we can find. How about, listeners, let's go to September. The September 1140 puts going up 12,600 times this week. Looks like a whopping goose egg today. All of that Monday and Tuesday. 8,200 on Monday. 4,300 and change today. Looks like opening most of the week. So intriguing opening paper on these 1140 puts. And right behind it, we have the par puts, the 1,200 puts. Also in that same time frame, going up 12,200 times this week. But again, this one kind of a little bit more scattered. 5,200 on Monday, 5,700 on Wednesday, and about 1,200 today. So opening paper on these 1,200 puts in September as well. So paper kind of all over the place out here in our old friend, the beans. You want to get a little bit farther out, listeners? Let's go out. How about 1140 puts in November of 2024? They also traded this week about 1,200 times. All of that on Wednesday, all opening. So somebody getting a little bit of longer term downside. Those are about 100 points out of the money out there. A little bit farther out on the curve here in beans. Since we're doing an Ags Palooza and we've got wheat lighting it up as well, let's go out to the big dog, the volume leader on the wheat side. It is Chicago wheat. Again, truncated holiday week, about 66,000 contracts on the tape this week. 42% of that going away in the contract that goes out in about 15 days. So we're going to hang out there. That future, 656 and 3/4, listeners, up nearly 6 points or nearly a full percent just since Monday's session. What is our vol out here in Chicago wheat? Nearly a 40. So looking pretty robust at about 2 2/3, I should say, on the week. In terms of skew, the puts last week, 5.5% cheap. This week, exactly flat. No bid at all or discount. The calls last week, 9.1% cheap. So it looks like we had, 9.1% bid. So there was a premium, a pretty hefty premium to the calls last week and a pretty decent discount to the puts. Looks like all of that has evaporated this week. The puts are literally flat and the calls are pretty close to it. The calls are 1.3% bid. So whatever we had going on out there in the wings last week, all of that is gone now. And the big dog this week looks like it's actually in the September contract that has about 50 days to go. It's the par calls, the 1,000 strike calls. Remember, not that long ago, listeners, we were talking about 1,000 plus levels for wheat. Right after the invasion last year, people got a little hyperbolic when it came to what was going on in the wheat market and starvation and volatility. It was pretty crazy. And we were talking about 1,000 plus strikes. Thankfully, we are well below that now, but looks like somebody coming back to play for size on the pars here in September. 2,300 times on Wednesday. That was pretty much all that she wrote for the week, but it was enough to be the volume leader for the week as well. Just straight opening on the September pars. That's interesting, listeners. Were they overwriting those? Let's look really quickly at the skews. We can get a chance to look at the skew here in September. The calls went from 10.6% bid to 6.1% bid in September. So it is possible they were overriding a bit of those. That would probably make more sense than just straight up buying the pars, the 1,000s. You need a heck of a lot to happen between now and September. So you're talking about 50 days. A heck of a lot of upside needs to materialize to make those 1,000 strike calls come to fruition. A bit of an overwrite, though. If you had the futures, letting them go at that level, I could certainly see an argument for that. Intriguing stuff, though, that is the number one trade out here in Chicago. Right behind it, though, going back to the contract going away in about 15 days, we have the 620 puts coming in at number 2 with about 2,000 contracts this week. Almost all of that today, 1,942 today. So, folks, looks like they're piling in because there's only about 1,200 contracts open on the strike. So opening paper on these 620 puts, again, that future is at 656 and 3/4 right now. So these have a ways to go as well, but we shall see. What do you like better, listeners? 620 puts going out about 15 days or the 1,000 strike calls going out in 50 days. Pick your poison out here in Chicago wheat, listeners. And I think we've exhausted most of the big traders out here in the ags. And we touched on our frequent offender friend, Nat Gas, where we haven't gone in a little while, listeners, which will be kind of fun to explore a little bit of the old equities. We got some popping off this week, so let's head out there next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the equities. Before we talk equities, listeners, let's do a little bit of the old vol breakdown. It's hard to talk equities without talking the flip side of that, which is volatility. As we mentioned, VIX kissing a 17 handle today. That sounds kind of rich given where we were just a week and change ago. 12 handle. 15 and a third when we kicked off the show, so giving a lot of that back. Still up about 1 2/3 points from where it was this time last week. VVIX, of the vol of vol, it was triple digits earlier this morning, giving some of that back as well, about a 95 right now, up about almost 10 handles on the week. A vol Q 1880, vol Q, of course, the at-the-money vol of the NASDAQ, listeners, up about half a point. That puts that VIX to vol Q spread at about 3.5 points. That's about 1.15 points tighter than it was this time last week. So that spread starting to come in a little bit. It's still fairly wide, though. 3.5 points for VIX to vol Q. You don't see it hanging out that wide very often. So if I had to wager, I would wager on that spread continuing to come in, barring some very interesting and or aberrant paper out there. Let's go out, listeners, now to our mover and shaker this week. We had, of course, number 4 to the dark side was the Russell 2000, off nearly 3% this week. Let's see if we got any paper to speak of. Not a heck of a lot. About 11,000 contracts on the old rut. We're talking 1854, where that future is, off nearly 50 handles. So once again, retreating away from that 2,000 level. What is the vol out here in small caps, listeners? Well, let's see, about 42% of the paper going up. In the July contract has about 25 days to go. If you look that far out, the vol's at about a 17.5. So not that dissimilar from what we're seeing out there in VIX land, where VIX kissed a 17 earlier this morning. Now, of course, retreating away from that. Structurally, small caps should be more volatile than large caps like the S&P, so we expect a little bit of a premium out there. In terms of action, it's a pretty decent-sized print, actually, for the rut. July 18 quarter puts going up 4,220 times, pretty much all of that on Monday, all opening. So someone piling into the 18 quarter puts. Again, these have 25 days to go. They're looking pretty good with this week's sell-off. We'll see if they are coming back in for more of those. Let's look at the skew. The skew came in a little bit. Obviously, that could be just the sell-off we're seeing as well. A lot of times in equities, people like to harvest some of those puts, so they could be selling those, in which case they could be looking to get themselves a little bit of small caps at that 18 quarter level. Intriguing stuff out there, but I know you guys want to talk about the big dog, which is the E-mini S&P 500. Of course, you don't need me to tell you that all things equities have pretty much all been truncated down to all things single day now. All 0 day all the time. In fact, right now, the contract going away in a few minutes has accounted for 21% of the paper this week. How much paper, you might be asking? Again, shortened holiday week, listeners, still 2.34 million contracts on the tape for the E-mini. So no slouch. And again, 21.1% of that going the way of the dodo in a few minutes, if not seconds. Hanging out 44, 48, off about almost a full percent in that future there. In terms of, let's see, vol, you know the deal. VIX is kind of getting anemic, and we're seeing that reflected across the board, 1383. And that front future is going out in a couple of seconds. We go a little bit farther out. If you go all the way out 4 days, we're hanging at a 9.5 in the vol, in the E-mini S&P. Yeah, those are some intriguing numbers, to put it mildly. Let's see. What is the biggest, most action-packed trade out here? Once again, listeners, it is folks picking up the proverbial nickel in front of the steamroller. It is the 3,800 puts going out in a day. They've traded 55,000 times already this week. Let's just kick those to the curb. Let's scroll down to some more relevant paper. How about 4,400 puts? How does that sound? These are going away in about a day as well. They got about 50 points to go, and they've traded 30,000 times pretty much exactly this week. Almost all of that today. 21,300 today, 6,800 on Wednesday, 2,000 on Monday. So opening paper on these 4,400 puts. You like these one day to go, about 50 handles out of the money. It's an intriguing roll of the dice, listeners, whether you're buying them or whether you're selling them. Looks like today's paper is opening. Only about 7,400 open on this strike. So folks piling into some 4,400 puts with one day to go. That sounds about right for the equities these days, listeners. If it's not expiring in a day, people just don't want anything to do with it. If we go out a whopping 4 days, the 3640 puts, it's like more of this nonsense going up here nearly 30,000 times. Let's look past those, listeners. How about the 39 half puts going out in 6 days? That's 50 handles below what we were just talking about. You get a little bit more time for those. You're getting 6 days and 25,400 contracts this week, trading 12,714 yesterday, all opening, and then 12,714 again today. So are they already bailing on these things? It's exactly the same volume. Opening 39 halves yesterday, bailing on them today. You are seeing that sell-off. Maybe they got the move they wanted, in which case they're taking all 12,714 of their balls and going home, living to fight another day with some money in their pocket. To boot, let's go a little bit farther out if we can, see if there's any other paper that's really lighting it up. 4,400 puts, so again, the pars, these are the ones going out in about 8 days, trading nearly 10,000 times this week. Again, these are now pretty much at the money puts, or pretty close to it. They're going up nearly 10,000 times, 4,200 today, 4,600 yesterday, about 700 and change on Monday. Looks like closing Monday, opening yesterday, and could be taking them off again today because that number for today's volume pretty much exactly matches the OI. So again, these are short-term trades, listeners. If you get the move you want, it makes some sense to get the heck out of Dodge. Let's go a little bit farther out. How about a funkier strike? Let's go out to July, a whopping 15 days away, listeners. I know. Sounds like an eternity when you're talking about equities these days. 45.90s. How does that strike suit you? Nearly 16,000 of those going up this week, so pretty action-packed strike there. 9,800 today, 5,600 on Monday, and just a couple of hundred on Wednesday. Worth noting, there's only 4,800 opening, so this is all opening paper today on the 45.90s. Going away in 15 days. Interesting. And then right behind it, we have the 45.50s doing about 11,000 contracts this week. So paper doesn't really line up to any sort of vertical or roll action. 2,700 on Monday, 3,700 on Wednesday, 4,400 today. And again, the OI is 9,000, so they could be closing some of those with today's paper. Again, the E-mini listeners, just paper for days, 41 half puts going out in 25 days, end of July puts, trading about 11,000 times this week. Again, pretty active all week long. The big day, though, was Monday, 5,000 on Monday, 3,800 on Wednesday, 2,300 today. Opening earlier in the week, closing on Wednesday. Not sure about today's paper. And let's go a little bit farther out. These are more, it's like more premium rights. We got the 37 half puts that go away in 43 days, going up nearly 13,000 times this week as well. So that's certainly not nothing. Yeah, it still is pretty much all 0 day all the time. You add in the contract going away in about a few minutes and the contract going away in a day, you're already at 40% of the paper for the week. Again, that just shows you where the action is in the E-mini and indeed in the equities these days. Unfortunately, that's all the action we have for you on the show this week. A lot of ags, a smattering of equities, and a little bit of energy. If you need more action in your lives, though, listeners, don't worry. I'll be coming back at you from the Southern studio tomorrow noon Central, 1 p.m. Eastern, to break down the mad week of equity volatility. If you want a deeper dive into things like VIX and vol of vol and all that fun, Vol Views is the show for you. After that, for all of you cool cats in the secret club, we'll be back with Options Oddities. Then back in the Chi-Town studio next week, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.